The nuclear winter for biotech has been the last 2.5 years.
The nuclear winter.
Yeah, it's been shocking.
Leslie Chong and Paul Hopper, welcome to Going Public. Leslie, you're the CEO and Managing Director, and Paul, you're the founder and Executive Chair of a company called Imugene. First thing, what does Imugene stand for? Like, what is your thesis and your proposition?
Imugene is all about trying to help patients with cancer. It's helping some patients live longer, stabilizing their disease, and hopefully leading to a cure.
How many raises did you have to do before you listed?
We set forth at the beginning of 2014 as a $5 or $6 million company. And by 21, we were the largest biotech on the exchange. We were $3 billion, and we were in the ASX 200.
One of the big parts of all this is valuation, because
right. This is a good question. At the end of the day, they're only buying if you've got...
Leslie Chong and Paul Hopper, welcome to, as it says up there, Going Public with Mark Bouris. Thanks very much. I appreciate your time. So Leslie, you're the CEO and Managing Director of a company called Imugene Limited, I guess.
That's correct.
Yep. And Paul, you're the founder and Executive Chair of the same company.
Correct.
Welcome, and thanks for both coming over. This is the first time I've done under this series, the first time I've done two people in an interview and a discussion about what it's like to access capital markets, public capital markets, and then take on a listing. And in your case, yours is ASX, ticker is IMU. And we'll talk about how well it's done, because from my notes, it's done very well. But probably first thing, what does Imugene stand for? Like, what's your deal? What is your thesis and your proposition? And maybe either one of you can answer the questions. Up to you guys.
Look, I think Imugene is all about trying to help patients with cancer. We feel pretty united against cancer, this fight against cancer. We're all affected by it, unfortunately. And I'm fortunate enough to be a part of a company that's helping some patients live longer, stabilizing their disease, and hopefully leading to a cure.
So it's a biotech. So by definition, biotechs are heavy on research, because you have to be, because you've got to try and put up a unique proposition relative to what you do. You're the founder of this, Paul. I mean, prior to being listed, what was it that drove you to find this company? Let's set this company up. What was it?
Well, I lived in the United States for about 11 years, and I had a business model which I built up, which was basically going around to all the major medical institutions and universities in America, like Memorial Sloan Kettering, MD Anderson, UCLA, City of Hope. And they have whole departments within their institutions where they seek to out-license technology that's being developed in the university or institution. And there comes a point where they don't want to fund effectively clinical trials, which is where the rubber hits the road in biotech. And so they look to industry to come in, do diligence on the technology and license it. So I found this technology at a university and licensed it, and away we went.
Maybe you could just dig into that a little bit, because what you said was quite modest, but most people don't know how this process works. So universities are great at doing research, and sometimes they get grants that fund PhD students and or professors and within departments, and let's look at the medical side of the world. And they get it to a certain stage, but the university ends up owning either all of it, a great part of that research, and especially if there's an outcome.
Yes, they own 100% of it.
Right.
They never give up the ownership of. So the intellectual property is the asset of a biotech company. We don't own bricks and mortar. We generally don't have laboratories carrying out experiments. So when you get a license from one of these universities, it's a technology license to the IP. They keep the IP until the patent expires, but you effectively own the rights to the technology, and you pay them fees as the drug develops.
So, and just so we should clear this up first, there are not a lot of people, but I've met many people over my time who scour the university campuses for different types of tech. In this case, you're talking about a biotech, but they scour the universities and they meet up with the university professors and academics, and they talk to them, and it's a long game. It's a very long game. You've got to be very patient, very long game. And then you've got to select, oh, hang on, that one there, that's like something I think I can commercialize. And is that your process?
That's exactly what you do. So you plow through. I mean, the universities have got hundreds of pages of technologies which will have a lot of trouble finding a home in the commercial world because they're either far too early. And you've got to remember, in the biotech game, what you're looking for is patient capital, because the time to develop a drug could be like 10 years. So and where the rubber hits the road, as I said, is when you first put it into a human. So we want to license the technology as close to a phase 1 clinical trial as you can. If you license it 4 or 5 years before a phase 1 trial, you're going to have a lot more trouble raising the capital and selling it to the market if, in fact, you want to go public with it.
Because you might run out of money too.
Right.
In the process.
So the idea is to find something which you believe is investable. In other words, you'll be able to put a story to the market that is convincing enough for people to write a check to invest in it.
So therefore you must by definition have to know the market. So you know what the audience, the market or the audience is looking for. So you know the audience at least you deal with, because you're the marketplace in that you're creating marketplace. You know who the investors are, and you know what is investable, because you know what's brewing in the universities.
You think you know,
hopefully,
yeah.
And your job is to sort of put them together, so to speak. In terms of the audience, the investors, how do you work out? What's it look like? You talking to these individuals? Like, I mean, how do you, or fund managers, or institutions, or family offices? How do you find these people? What's your process?
Well, I've been at it a long time, so I know where everyone is, where they're all located, and I know a lot of the brokers. And so,
brokers being stockbrokers.
Stockbrokers, yeah. In the US they call them bankers. So I know who the marketplace is. And as you do the diligence, let's say you find a technology like Imugene has, which came from the University of Vienna Medical School, and it was a vaccine for breast cancer.
Wow.
Right. So I'm not a scientist. I don't know the intricacies of that sort of work, but I know I have a panel of people who are experts, and I show it to them. And as you do the due diligence, it becomes apparent to you whether this thing is going to fly in the capital markets. Are people going to believe the story? Is it the things that they claim? Because you've never met a scientist who doesn't believe they've got the answer to curing cancer. They all believe their technology is the best in the world, which I guess is a good thing. So, but as you do the diligence, and Leslie and I have done this over the years many times, because we get shown things.
Oh, so you guys this is not your first show together, so to speak?
Oh, no, we've been together for nearly 10 years,
right,
working together. I just needed to make that clear.
No, it's thank you.
So we've looked at a lot of technologies together and diligenced them and walked away from most of them.
Right.
Because at the end of the day, you have to make a commercial assessment. Well, you've got to make two assessments: a scientific assessment. Can this really become a drug? Has it really got a chance? Because in cancer, the vast majority of the drugs fail. They never get approved because it's such a difficult thing to cure cancer. And cancer is a very, very resilient, bulletproof illness. So you have to start with the assumption that it's going to be difficult to get it approved. And so often it'll fail on that. And then there's the commercial considerations as well. So
if you could just take me, so you've identified at this university, the name of which escapes me because I've never heard of the university before, but not that I don't think that's all that relevant. You know, there's an audience over potentially who might want to invest. How did you both work out that this particular drug, was it a drug for a particular
experimental drug,
which hadn't been clinically tested?
Yes, it has. It had been in a phase 1 clinical trial.
Been in a phase 1 clinical trial.
And it had some interesting results.
So some sort of validation in terms of what they were, what the thesis was.
It was safe, because the first thing is to determine safety.
So it didn't grow another arm?
If it's not safe, you can't go anywhere. That's the end of the drug. Yeah. And then it also had what we call efficacy. It had a signal that it might be working, a subtle signal that there was something happening in terms of maybe reducing the cancer or whatever. And then we showed it to a lot of people that knew what they were talking about, and we got the seal of approval. So then I went back and forth to Vienna in Austria, which is where it was invented. I formed a company and put some money in and signed a license with the university, and then took it to the markets here in Australia. And we actually did a reverse merger or a backdoor listing on a company called Imugene that was really just a shell. And on the back of that, we raised, I think, $5 million. And we listed, I think, almost on Christmas Eve 2013. And there the next day, not the next day, but a week later, we were trading under the symbol of IMU, and we were a cancer biotech company.
And biotechs have had some ups and downs over the last, be fair to say, over the last 5-6 years. Some of them are not as popular as they were.
Yeah.
Biotech was a big deal about pre-COVID, I think.
Yeah, so the nuclear winter for biotech has been the last 2.5 years.
The nuclear winter.
Yeah, it's been shocking.
I like that.
It's been hell.
So, Leslie, when you are looking at something like this, and Paul just mentioned there's a panel of hard-nosed scientists, I guess. Is that what we're talking about? Is that what we're talking about?
Well, so I declare myself as a drug developer, a cancer drug developer from Genentech. So I was happy at Genentech, being an executive there, having lived there, and I looked at Imugene and thought, wow, this is something new. This is novel. This could work. I had come from a place where we love innovation. And so I thought this was quite innovative. And I joined the company in late 2015 after having looked at that asset from the Medical University of Vienna and started developing it as soon as I got into the company.
So when you see that asset, I mean, and most people probably wouldn't see it as a property asset, but it is a property asset, and it's intellectual property because it's not something you can touch or whatever. But there's intellectual property in that somebody has gone off and designed a drug or tested a drug for a certain outcome. When you see that, how do you work out whether or not it's something that potentially could get commercialized? Because it's a big call. Like, obviously there's demand for it. There's cancer cures, there's demand for a cancer cure. But how do you work out whether it's something that will fly?
Well, you have to look at the current landscape of that particular disease and see if there's a market for it initially. If it's already cluttered and you have a lot of marketed products already.
As in competition
or things that are already, considered a standard of care, that means they've approved the drug and it's being sold. So doctors can't prescribe you anything that's considered an investigational product, like an experimental drug. So you look at the landscape and see, well, is there a lot of products for this particular breast cancer or this particular gastric cancer? And then you look at ways of being able to navigate through that drug development pathway. And that's exactly what we did with the initial product, Hervax, that we call it. It's a vaccine that goes after a certain mutation on the cell. And it started working in the phase 1, and we knew that we could develop it further. And so that's exactly what we did. At the end of 2021, we had completed a phase 2 study with the product. And then we thought, well, Paul and I were very excited about the prospect of having assets and new innovative science into the company. So we brought on, just like Paul was saying earlier, he walked up and down City of Hope, a major cancer center out of California, found a product, and he was looking at the science and had a review from his panel of scientists. And I happened to have looked at it on his desk and knew that it was a good fit for Imugene. So we brought that on as well into the company.
So do you mind just humoring me, or maybe indulging me a little bit, into what the drug actually does? So I mean, what is it chasing? What cancer of what type?
So for the initial product that we call Hervax,
I should finish that. But you also mentioned it's like a vaccine.
So this is a vaccine, but it's not prophylactic.
Which
so
means?
You don't use it pre-cancer.
Right.
You use it as a treatment. after you've had cancer.
Right. So maybe just go through that process though of immunization, how that works. Because I recently lost my father who went through immunotherapy, and I was trying to work out what they're talking about when it didn't work for him because he was too far advanced. But is that a form of immunotherapy?
Absolutely.
Yeah.
It's all of immunotherapy. Just simply means you're using your immune system to go after a certain kind of cancer or a target. Exactly. Hopefully your own immune system, because right now as we're sitting here, our immune system is already surveilling our bodies for things that are mutant, things that are untowards yourself. So just as bacteria or viruses, they go after them. It's when it goes awry, then it becomes cancer. Cancer has been living in one system for maybe a year, upwards of 30 years. So it's had a lot of time to mutate and actually hide from your immune system.
Right, that's interesting. So, but is your immune system looking for it?
It finds a way to avoid or evade the immune system.
The cancer does?
Yes.
But is your immune system, if it can't do that, if it can't find a way to avoid it, will your own immune system destroy that
Generally,
cancer?
yes.
Oh, really?
So we're sitting here and hopefully our immune system is doing exactly what it's supposed to do, is to get rid of our mutant or mutated cells so that they don't divide and become cancer.
Right, that's interesting. So the drug itself, what does it do? Does it enhance the immune system? What does it do? Or does it teaches it how to look for something?
A little bit, all of that, all of the above. So there are drugs out there that fortifies your immune system so that it can see the cancer. There are drugs that actually inhibit certain signaling to the immune system that they're okay. So you have these bad mutated cells that tells the immune system, everything's cool here. We're going to multiply. It's okay. We're like regular cells because it's learned how to do that.
Sounds like a Trojan horse.
That's a really great way to put it. So it's a decoy. It's a chameleon. It hides from your immune system. So when your immune system finds a drug maybe that inhibits that signaling or telling of your immune system that there's something awry, those are also immunotherapy because it teaches your immune system this is cancer, guys. Come and get me.
So your company, what are you currently developing? Well, I'll come back to the listing in a moment, but just as a concept, what are you currently developing that's exciting?
Oh, we've got so many things that are exciting with the company. I don't even know where to start, but I think our prioritized program now is this thing called Azer-cel. This is a revolution in blood cancer. So you've heard of CAR-Ts, have you? Chimeric antigen.
No, go through it. Tell me.
So CAR-Ts are a means of fortifying your T cells. They're engineered to soup up your T cells, and then the T cells goes after a certain mutant target. So in this case, let's say CD19, cluster differentiated 19. It only happens in blood cancers. So you have too many of these signaling paths, then you have a therapy called CAR-T, re-engineered T cells that learns or teaches your T cells to go after CD19 and CD19 only. So it's like a missile-guided, it's a guided missile towards a CD19. Yes, exactly.
We actually use an image of that in our slide.
Scud.
So let me explain it. That may be a bit technical, but here's me talking to a broker, okay?
Yeah.
So basically a CAR-T, you're a cancer patient. We take your blood out. We separate the T cells. We take the T cells to a laboratory and we reprogram the software. We then
like literally with software.
We engineer the T cell so that it has only one thing on its mind. It becomes a guided missile, and it's reprogrammed to recognize a bullseye on the surface of a cancer cell. It's a specific type of bullseye. So breast cancer, it might be HER2. It just depends on the cancer. The bullseye will vary. And once we've programmed it to that bullseye, it's become a CAR T cell. We inject it back in. And when it goes in, think in your mind of a missile with the bullseye target on its brain, and it'll wander around the system. And when it sees that bullseye on the cancer cell, it attacks. If you don't have that bullseye on the cancer cell, the missile will wander around aimlessly because it won't have anywhere to go.
That's very interesting. So is
that okay?
That's great.
So typically, I remember when my dad was in hospital, he had radiotherapy, so it was like very direct and sort of, a few things on his skin, and they seemed to be able to heal it, get rid of it pretty quickly. But they said the immunotherapy, then they said we should go on immunotherapy because he ended up having cancer in lots of different places, but particularly in the lungs. So you're saying the immunotherapy that you guys do would actually look at the particular cancer he has. You would take the T cells out of his blood. Don't know how you do that, but you take it to somehow get the T cells out of your blood. You reprogram them to look for this particular type of cancer. Then I guess you put it back into his system.
Yeah.
Inject it back into him. And those T cells,
it's a handmade, bespoke treatment made from your own blood.
This is new therapy. Immunotherapy is relatively speaking new.
It's relatively new. I would say the birth of immunotherapy was really roughly about 12 years ago when things like Keytruda, I'm going to guess your dad had lung cancer, so he probably got an immunotherapy called a checkpoint inhibitor, which is very different from CAR Ts.
Right.
So CAR Ts currently are only approved for blood cancers, which is roughly about 10% of all cancer type. So the CAR Ts in this field, in the blood cancer, if you have a certain malignancy, a CAR T that what Paul was talking about, you get your blood taken out, they separate the T cells, they take it to a lab, they re-engineer the T cells and put it back into very bespoke, highly personalized. That has led to a revolution in how we can treat certain kinds of blood cancers. Folks are walking out nearly cured of their cancer. This is 90% response rate, sometimes 60%. So 11 years ago, the first CAR T was approved. It's arduous, it's manufacturing heavy. There are new things now called allogeneic CAR T, where you take a healthy donor T cells, re-engineer that in the lab outside of the human body. And when a patient comes in and has a certain kind of blood cancer malignancies, then they can get it off the shelf. So that's what we have at Imugene. It's called an allogeneic CAR T, and it still works similar to the way the bespoke one, but this isn't so much personalized. We're not using a sick patient's T cell and bumping them up. We're actually using a very healthy T cell donor, souping those up even further, and then treating patients that are quite ill with blood cancers.
So you should think of them as CAR Ts come in two flavors. There's the bespoke.
Love the banker, don't you?
I know.
You go to the
Paul's
tailor.
great at this.
You go to the tailor and have a suit made, and that's called an autologous CAR T. And the second flavor is allogeneic, which is off the rack. You go to DJ's and buy the suit off the rack. That's the two types: handmade, mass made.
And where are you guys advancing to now? So what's exciting happening within Imugene, like in terms of, because I saw something that was about gastroenterology and colon cancer, for example, is of interest to me because I have a familial connection to that in terms of people within my family tree on one side. So I'm actually interested in myself. So because this is the new world, isn't it? This is
novel. This is new. There are no allogeneic CAR Ts approved. So what Paul talked about, the bespoke suits, that's already approved and marketed.
Approved by, you're talking about TGA, FDA, who are you talking about?
TGA, FDA, right. European, EMEA, all of it.
Right.
So it's quite approved because it's showing such great promise and response.
And the process of getting things approved, not just you, but your whole industry, it's capital heavy too, isn't it? Because these things take a long time. There's a lot of people, the clinicians, you've got to...
hundreds of millions.
People, totally. And a long time.
But that is why you have to have a team that understands drug development, especially in the cancer landscape. It's not just to say you have capital. You have to deploy it in the most genius way.
Efficiency. You can't waste a dollar.
I think about the word scrappy a lot, and it's not something that folks like to think about, but I love being efficient. I like being fast. My parents, my dad passed away from gastric cancer. My mom is a lung cancer survivor. So I know people are waiting for good medicine out there. We need better medicine, bigger and better. but faster.
When you say scrapping, do you mean, wow, that didn't work, I've got to just go around another direction? Is that what you mean by scrapping?
I need to be able to pivot, but also just because I'm a CEO, that doesn't mean I'm not in the weeds with developing. I'm not in the weeds with, I'm there talking to the FDA, talking to the team about how we can pivot. How can we get a patient in today as opposed to next week?
For clinical trials?
For clinical trials.
You're right. So when you can scrap it, because there's all this ethics involved and all this sort of stuff. There's a lot of
heavily. We are regulated to the max, but that's. I think it's the right thing to do. We're talking about patient safety, and that is the utmost importance to us.
But it does take time, and therefore time is money because you're spending the whole time. So when you go back to your investors, so let's just look at Imugene. When you found. You mentioned that you put some money into a company you set up in Vienna. It's probably not that simple. You had to go to investors to raise some money. Is that what you did? So there was how many raises did you have to do before you listed?
Well, I funded it myself until we listed, and then when we did the backdoor listing, we raised about 4 to 5 million.
Okay, so that's relatively modest.
Yeah. So the company started life with a market cap probably of 6 million. There was $1 million for the value of the shell, and then the money we put in. So we set forth in at the beginning of 2014 as a $5 or $6 million company, and then by 21 we were the largest biotech on the exchange. We were 3 billion, and we were in the ASX 200,
which is important. I want to come back to that then. So, just for the sake of the discussion and the audience, just take us through what you mean by backdoor listing. So there's a listed entity in existence, and take me through that process.
Sure. So in those days, the ASX was not resistive to companies doing a reverse merger or a backdoor listing. That is where a private company puts itself into a public shell that that's basically lost its way.
It's not doing anything.
Correct.
It's listed. Yeah. It's got shareholders. It's got the right number of shareholders.
Yep.
It's got to have a couple of thousand shareholders, perhaps.
Yeah.
It's got maybe some cash in there, or a little bit of cash in there. The original business, or the business that was originally proposed to be run on this ASX listing, is probably no longer happening.
Correct.
But it's just sort of sitting there, not dormant, but idle.
Correct.
For a better way of putting it. And then that entity buys your entity in return for stock.
Yes. Yeah.
So it's not actually. Yeah. When we call it a backdoor listing, but it's not quite.
Yeah. Look, no cash exchanges hands because the shell doesn't have any.
No,
to be
it's
honest.
got no money.
And that was a very popular way for biotechs to get listed.
Yep.
But the ASX doesn't like that anymore. So I did try it with one of my companies 5 years ago, and they declined it. So all my listed companies since are through the front door prospectus, a brand new listing.
So just back in those days, though, whilst you didn't have one of the advantages of a backdoor listing, so to speak, is that the host company, which is the listed entity, acquires the active entity,
the private company,
in return for stock. So the shareholders of the private company get shares, and there's probably a capital gains advantage in that because you're swapping shares for shares.
But you don't get taxed on it.
That's what I'm saying. It's a capital gains advantage. You roll it over.
Yeah.
So you only pay tax on when you sell the listed company shares. So there's tax advantages in that. Also, one of the big advantages, as I recall, is that you didn't have to do a prospectus, which is a pretty rigorous process, but you did have to do an information memorandum. Yeah. Less rigorous, but nonetheless, you're responsible for it.
Yeah, that's why people did it, because it was slightly easier to do a backdoor listing. And in the last number of years, the ASX does not like that.
And now the prospectus process. So if we just go through that experience and how you deal with, you have to have a broker, there's a review done by the broker that is your sponsoring broker, et cetera, et cetera. Maybe we just go through that process and, who did you have to talk to, and what did you have to get valuations? What did you have to present to the sponsoring broker in the newer ones, for example, in the ones you're doing now? So what was your process? How difficult is it?
Well, we've never done that process since 2013.
Not together
with Imugene, because that's.
But you've done it.
Yeah, so I've done 2 IPOs in the last 3 years. So basically, I'd find the technology, do the diligence on it with the scientific experts. At that point, I start to involve a broker and get them familiar with the technology and why I think it's good and what the development plan is. And the critical thing is, first of all, you have to be satisfied on the scientific validity and credibility. And then secondly, you have to have a management team that have the expertise in the domain of the technology you're working on. And as Leslie just touched upon, they must have clinical experience, because what the market wants is, if the drug is not already in a phase 1, the market wants you to get into a phase 1 clinical trial, that is in humans, ASAP. They don't want to wait. So you do need to have experts in clinical drug development. And there's not a lot of those. There are in America, but they're less common in Australia. So I would bring the broker in fairly early in the piece and get them comfortable with it. Then we would have a bunch of lawyers that I've used on all my IPOs, and we would prepare a prospectus. The management team that you're going to present at the IPO would be closely involved in that, and we'd write the prospectus. And when the time was right, everything was ticked off. The ASX had approved. You have to. I should have added. You have to submit a preliminary listing application to the ASX, where you set out why this is going to be a viable business, because they don't want to have companies being listed that fall apart, 6 or 12 months later. So you have to give a whole lot on the management team and what the business plan is. And once you get that from the ASX, that's really the green light to go.
Yeah, and the process of going to shareholders, new shareholders, to support the listing, because then you go and raise money. Once you're listed, you go off to raise more money.
Right.
Once the backdoor listing has been done, you go off and raise some more money with shareholders. Part of that process, and you mentioned lawyers, etc., that's really more paperwork and process. A lot of the stuff just comes straight off the system.
Yep.
One of the big parts of all this is the valuation, because
right. This is a good question.
And generally speaking, these entities aren't making, or this business is not making money at this stage. I mean, it's still looking for a second clinical trial or a clinical trial. So you're not out there, the local GP or the St. Vincent's Hospital down the road. It's not the oncology department's not using this drug, because this is a new thing being developed. As Leslie says, it's novel, it's brand new. How do you? What type of person, organisation do you have to go to get the valuation, let's call it endorsed or ticked off? And how do you work out what the value is? Because, you're saying to the new shareholders, listen, we want to raise 5 million. For that, we're going to give away, 20% of the business. And on that basis, the business is worth blah. The enterprise value of the business is worth X. It's an enterprise value. It's not based on P&Ls and profits and stuff like that, because you're not making any. How do you do that?
Okay, so the valuing of a business pre-IPO and at IPO is an inexact science.
Very.
So it's the people that put the IPO or the company together want to maximise the value.
Because they want to have the least amount of dilution.
Correct. They want to have the biggest shareholding at the end of the day. The broker wants to price the company or value it at a level at which they can sell it to
their clients. Usually.
And so there's a little tension at the beginning between that. But in all my IPOs, what I've done is I've done a pre-IPO raise, usually using a convertible note. So, and the convertible note allows them to convert at, say, a 25% discount to the IPO price. And you might say to them, we're going to IPO in 6 months. So they put the money in now, and at the IPO, if the IPO is, say, at $1, they get their shares at 75 cents.
They get their convertible note conversion at 75 cents. Yeah. So what's interesting about that, though, is so therefore the person you've got to convince of the valuation is the convertible note holder, and you use that as a proxy, that valuation as a proxy for your listing.
Sort of.
Or as a baseline, at least.
Yes.
You can say, well, hang on, we just raised $1 million of convertible notes at this valuation. We're now, say, $1 million. We now want to list this entity at 5 million, or this business at 5 million, because we have done the following things. We've improved the tech, and we've advanced, and we've done these trials, and we've got these results, etc. Is that what we're talking about?
Well, in my case, the convertible note raising is within eyesight of an IPO because the convertible note holders want to see the company listed quickly. They don't want to. I mean, this is not prescriptive.
No.
Other people's experience is different, but mine was we did our IPOs within 6 months or less of the convertible notes.
So temporal proximity between note issuance and share issuance.
Yeah.
In relation to the ASX listing.
Yeah.
So, and that's, do you have to get, I don't know, Deloitte or KPMG to say, yeah, we're pretty comfortable with that? How important is that process?
You don't get as valuation as such as what you're referring to.
Yeah.
But yeah, you need a sign off from the auditors and all that sort of thing, confirming that the forecasts look reasonable. You've got to remember, you're not doing any forecasts on profitability or sales because these companies never generate, with one or two exceptions, they don't generate sales because you generally license or partner or sell out to big pharma in phase 2.
Down the track.
And they wind up
You do all the hard work.
And then they take it and do the phase 3 studies. So these companies don't really have sales forecasts or that sort of thing.
Yeah.
It's a cash flow forecast. In other words, how much will you spend? I mean, the ASX expects you to demonstrate about 2 years runway on the cash you raise. 2 years. So you have to demonstrate that the way you've built the company in terms of the management team and the clinical trials and the burn and the manufacturing of the drug marries up with about a 24-month runway.
Cash runway. And then, and what are some of the reporting requirements the ASX has? Say, let's look at Imugene now, because you have to quarterly cash reports. Yeah. So
4C.
Absolutely.
Yeah, what they call 4Cs. And the objective behind the 4C is to make sure shareholders are fully aware of the cash runway. In other words, you're not burning more than you originally forecast or don't have to go back to the market. Explain what that is about.
We don't have any forecasts that they refer back to.
In terms of cash spent.
Yeah, because Imugene was listed 9 years ago.
Right.
And it's got $110 million in the bank at the moment. So it's got a lot of money. It's
wow. Is that from, what is that from? Is this from additional raisings? Or?
Yeah, we've been very, very successful in raising money at Imugene. Very successful.
So how many more raisings have you done since the original listing?
Oh, look, in the first 5 years was hand to mouth. You know, we were doing $3 or $4 million raises, and
that was a scrappy time.
And being grateful when we raised $3 or $4 million, and then we got in, and then we got into that period you talked about it pre-COVID, where it was the era of free money. The market was alive. Biotech was booming. We had some promising data, and people were very keen to invest, and we raised big licks of money. I mean, we could do $80 million in a raise, and we did $80 million last year. So the company's always been very, very popular with investors.
So popularity has got a lot to do with trust, and trust has got a lot to do with communication. How would you two communicate at Imugene, for example? I mean, like, do the two of you go off to see investors all the time? Do you know who your major investors are? I mean, what's your process of dealing with this?
Communication is very much key at Imugene. We speak with our probably top 50, top 100 on a fairly frequent basis.
What are we talking about?
We
Before
have
the 4C or after the 4C or every month?
All of it. Yeah, all of
the
it.
time.
Yeah.
It's non-stop.
We have a continuous disclosure rules that we follow, abide by.
But do you go beyond the continuous disclosure rules? I mean, not, if you found something interesting, you got to put up on the ASX. I get that part, but are you sort of ringing up the guy from the fund manager who's particularly interested? How you going? And just sort of catch up with you.
Sometimes, yes. Yeah. We host lunches. I go into several, investment offices and have a conversation. It's simple as sometimes even answering the phone or doing a presentation in a video conference, et cetera. So all of the above.
We do 4 newsletters a year. We post on all the social media sites. So yeah, it's not hard to find out what the company's up to.
And do you do publications or publish in medical journals?
Absolutely. I think that's key. These are scientific matters, and the audience that we have inevitably is the pharmaceutical company, and they understand science. So we do publications across and conferences, major cancer conferences.
Yeah, so you're in the news all the time.
Pretty consistently,
trying to be in the news. When I say news, I'm talking about your market news. Like as you say, conferences and pharmaceutical, publications and also, probably more importantly, publishing in high-level journals where you can, or
Absolutely.
at least submitting things for publication for peer review. I mean, that's a process.
Yes.
Absolutely. That's a must.
Yeah. So, yeah, I think that in your game, because it's complex, it is a complex. The science is complex for a normal investor. How do you ramp down the language that, let's say, a fund manager who's got a fairly broad list of investments, perhaps they're all health, but it doesn't matter. They could be from, toe fungus to cancer cures or whatever. I mean, how do you dumb down? I don't want to say dumb down. That's a tough word.
Make it accessible.
That's a good word. Very, very politically correct. How do you do that? What's your process?
Well, the process is I talk to Paul quite a lot about certain programs that we have in our company and how to describe it. So the description has to be married with, it has to resonate with the person. It has to be, we have to use the words that folks understand. So
language becomes important.
Language becomes so very important. Description becomes even more important because science is very difficult. Even to another scientist, I think a particular science, that assets that you have or technology in the company is very difficult for even a scientist to understand at times, and especially how you're taking it through the drug development
path. It can be
pretty
dense. I mean, I don't mean in a stupid sense, but really dense in the weeds. Like you're
and you should be. We're trying to cure cancer, right? So we are that, but we understand that the market needs simpler explanation. Paul and I are constantly looking at new ways of how to make our investors understand what we're doing.
Yeah.
So I've learned, and I've been very well trained in taking a very difficult word and then lessening it and making it much more accessible for our investment boys.
Medical thesaurus.
So, well, I think that's Paul.
That's Paul. Paul's medical thesaurus. Because you gave me some examples earlier on. We were talking about scuds, but you actually gave me the one about the Taylor suit and the David Jones suit. So they're very good analogies. And that's a skill.
Yeah, because I think if you present it in a way like a suit, tailor-made or whatever, people immediately imagine it. I used to carry a tennis ball, a yellow tennis ball around to presentations, and I'd put it, when we'd start the presentation, I'd put it on the table and everyone would look and think, what's he doing? And I'd pick it up and I'd say, I want you to imagine this is a breast cancer cell, and you see all the hairs on the top of the cell, those little yellow furry things. They're breast cancer receptors called HER2. If you've got lots of those on your breast cancer, the outlook is no good. Now, what have we got? We've got an antibody that will kill that breast cancer cell. And I'd gone to a toy shop with my daughter and I'd bought the letter Y, an alphabet. Now, Y is what an antibody sort of looks like. And I pick it up out of my pocket and I see this. This is an antibody. And this antibody doesn't like HER2, the little follicles on the tennis ball. And I'd go and I'd stab the tennis ball. Everyone got it. So, yeah, I think rendering it very simple with some very easy to understand illustrations makes a difference.
It's pretty cool. It's really important. And I think the word you use is rendering, is taking the science and making it digestible, because at the end of the day, investors are investors and they don't want anything that's too hard, because they've got to talk to somebody as well. There might be a family office. They've got to talk to their the people who are directing them, who they're giving them instructions. It could be just a normal family. It could be a fund manager. It could be a small fund manager in particular. And if it's complex, they, to some extent, they usually don't want to know about it unless there's something unbelievably brilliant. It's the biggest market in the world. And just to finish off on this, guys, the last part of all this, so you continue to do your clinical trials, you continue to develop lots of different drugs for lots of different types of cancer. When you have these businesses and you get them listed, you've got to work out what your exit is. Always got to be an exit, and especially when you're a deal maker like you're finding, you're funding, you're building, and you're exiting. That's sort of basically the process. What's the ultimate exit for this? It's not necessarily be selling drugs to St. Vincent's
Yes,
Hospital.
we're not going to go out and hire 60-foot soldiers in America to sell drugs to hospitals and doctors. So we'll find a partner, Leslie.
Yes, so we'll look for a pharmaceutical company or a big biotech company that wants to partner or completely commercialize our product.
So we're talking about just ultimately, you're talking about, is that someone like Pfizer? Is that what you're looking at? That type of organization?
Pfizer, Genentech,
Genentech,
former company, GSK, all the big pharmaceutical company down to Moderna or other biotech companies that have recently come up.
GSK being GlaxoSmithKline.
That's right.
Yeah. So given that's the case, that's your ultimate audience, are you always building behind the scenes with behind the scenes language and behind the scenes content, something that will appeal to those organizations? Are you continually peppering them?
And you asked a question earlier about publication and conferences, and that's exactly right, because that's their language. Science is their language, and that's not the language that I can use with investors, but I certainly use those language with pharmaceutical companies via publication, via conferences, via meetings.
So that's important. So the playground of the ultimate buyer, of the ultimate exit, you have to be pushing stuff into that particular playground. And the playground you're saying of the, the various biotechs and pharmaceutical companies is the publication arena, because they must have teams of people reading these.
That's exactly, that's their sandbox.
And there is another method by which small biotechs put themselves in front of big pharma. So there are major biotech conferences around the world. The big pharma companies will often take a whole floor in a hotel and put all their experts in one room. So there'll be, with cancer, there might be 4 different experts, and there'll be someone with central nervous system, metabolic disease, and they'll just sit there all day from 8:30 in the morning listening, and you'll do a speed dating.
Like a pitch.
And you come in and you've got half an hour to tell the person what you're about. So they actively look for technologies, but that's all backed up by what Leslie's saying in terms of our presentations, our articles that get in peer-reviewed journals, and obviously we have contacts with everyone in all the major pharmaceutical companies.
So basically what you're saying to me, Paul, is that it's about is a process right from the very day where you meet the lawyers that you usually deal with, and probably the brokers. You have a team of brokers, different types of brokers you deal with for different types of asset classes. And then the process doesn't stop there. The process continues through the development, through actually talking to your shareholders, your current shareholders, to make sure they continue to support you. And then the process also continues in terms of who your ultimate takeout might be. Whether that happens or not, it doesn't matter. It might not be the ultimate takeout. I mean, anything could happen. You might get taken over by a biotech. They might not be trying to buy the technology so much, they just want to build, but just become a bigger conglomerate. But the process starts and never finishes. It just continues on, irrespective of whether you're listed on the ASX or not. The ASX helps you get there, get the patient capital, because you called it patient capital right at the very beginning, which is probably the most important thing. The shareholders that you appeal to raise the $5 million in the case of Imugene, that was explained to these individuals that this has got to be patient. You don't expect me to be giving a profit at the end of the year and paying a dividend. Correct. So as long as they have that expectation up front and you continue to feed them the developments and the advancements, and these are all the milestones we've told you about, we're hitting them or we're getting close to them, then they'll be happy, or happy enough, put it that way. What just as a final thing, Paul, you might be able to help me out here. What was it that sort of people got a bit angry about biotechs that happened during, I think it was during the COVID period or around that period, but biotechs went a little bit off the ball. You guys didn't. You guys killed it. You're still killing it. But what happened?
Well, I think it was part of the general meltdown in the markets. If you remember, January 22 opened, there'd been a wholesale sell-off across the world. The era of free money was over. Interest rates went to 5%. Technology was completely shunned, and biotech was put under the same umbrella as that, and nobody wanted to know us. So it is much better now. In the last couple of months, there's been some extraordinary raises. There's been Clarity raised a huge amount of money. Opthea raised a couple of $100 million. One of my other companies last week raised $70 million. Botanics, I think a cannabis company, raised 50. So there are definitely, as they say, green shoots appearing. So the market's changed a little bit, which is great. But I think we just fell out of bed with everyone else. I mean, it was universal. It was across the US markets, in Europe. The small biotechs had a very hard time.
And I have one final question for you, Paul. But how important is it when you go in these environments, that is to raise money from whatever market you're trying to raise money, but in this case, we're trying to raise money from a particular capital market, which is a listed capital market. How important is it to understand, generally speaking, global liquidity and where, because the money always finds its way to a certain asset class.
Yeah.
It just has this habit of doing it.
Yes.
And during the COVID period, when interest rates were 0.1% here in Australia, that liquidity is looking for anything. There's with a bit of promise in it, because putting your money on deposit at 0.1% is not that great. How do you, Paul, keep up with being close to where global liquidity and domestic liquidity is going? How do you follow? Because liquidity changed, as you said, in 2022, when interest rates went to, and you put your money in the bank at 5%, I'll put my money in the bank at 5%. Why would I go chasing a biotech? I've got to wait years to get my money. I might as well just hang around for a while and get 5% per annum. I got the money in the bank. I'm happy. I'm relaxed for a couple of years. I might come back into the market. How do you sort of plot where liquidity is going?
I think that's a pretty difficult job to do, to be honest.
But you've got to be a student of it.
Yeah. The problem we have in Australia is 10 years ago, biotech was not an established asset class. It was highly speculative. It was like drilling for oil or, something out west. So there was a handful of people or instos that invested. It is still not an established asset class, but there are 5 to 10 times more buyers of biotech stocks than they were in those days. Of course, in America, it is definitely an established asset class. There's thousands of analysts. There's dozens and dozens, maybe hundreds of life science biotech funds that specialize. So, that's a great audience. In terms of the liquidity, sometimes in Australia you can raise money and you can't raise it in the US. They're not always in kilter. I've had that a couple of times. But, Leslie and I are in the States, probably every 6 weeks. I'm plugged into pretty well every major life science investment bank in the States. I know probably the top 50 biotech buyers of stocks in the United States. So we get a good feel, and you can tell. I mean, if you went out in the middle of the COVID regime when the markets were in the nuclear winter, trying to do a roadshow and get more than 5 or 6 meetings, you're probably lucky. So it fluctuates, but at the moment it is a very positive market.
So would it be fair to say then it's again about communicating with those most likely or the usual suspects, making sure that you're always in communication with, so you know what their appetite is, how many, whether they've just raised and they need to invest. It's just communicating, keeping in touch with people, roadshows, again, publications, turning up to events, just making sure you're in the game.
Right, but at the end of the day, they're only buying if you've got convincing data.
And a good story around it.
Yeah.
But
You've got to have the data.
You've got to have the data, which means you have got to keep developing.
Absolutely.
Because you can't just go and bullshit everybody. You've got to keep developing and actually
And that's what I love to do. I want to develop medication for cancer patients one day. I think it's a thrill to think about one of our products becoming a drug one day.
What a great combination. Thanks very much for coming on to Going Public.
Thank you for having us.
Thank you.
Most welcome.